Hi there, and welcome to this learning session on IFRS 15. In this video, we will have a discussion on the disclosure requirement for the changes in the accounting policies. In the previous video, we discussed about the impact on the interim financial statements, but here we will have a discussion on the full financial statements in the year-end financial statements, the full year. What are the changes and the impact? So the learning outcomes would be the disclosure for the changes in the accounting policies. So whenever there is a change in the accounting policy in accordance with any standard, so we this video is not only related to the IFRS 15, it's related to any change in the accounting policy. Because when we have a new standard, it brings in a lot of changes in the accounting policy. So the entire video will be discussing on the requirements of IAS 8 to be precise. So when the initial application of an IFRS, suppose it's IFRS 15, any IFRS, has an impact on the current period or any prior period, in the current period or in the prior period, or that would have an impact except to the extent it is impracticable. Sometimes the requirement is very much, and it is sometimes will be impracticable to apply everything, or may have an effect on the future period. Either going to have an effect on the current period, prior period, or future period. Except which is impracticable to determine, we need to disclose this. So suppose if there is a change, it is going to impact in the current period, prior period, or future period. Except to the extent impracticable, we need to explain these things. The title of the IFRS, suppose it is IFRS 15, when applicable, that the changes in the accounting policy. It is applicable from 1st Jan 2018, accounts beginning on or after. The nature of the changes in the accounting policy, so we need to explain everything. This is a 5-step model, blah, 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 5 steps, everything we need to disclose it here. A transition provision under the IFRS. So we've read there are two transition method, that is full application, full or modified retrospective application. So we need to disclose this thing, and after that we need to disclose also the transition provision that may have an impact on the future periods. So if there is any transition provision that are going to have an impact on the future periods, because all the standards, suppose we are going to apply the standard from 2018, so the transition provision we will apply till 1st Jan 2018, it may not have effect on the future period. So there may be transition provision that may have impact on the future period. Then in such a case, we need to disclose it, the transition provisions, and for the current period and for the each period presented the amount of the adjustment. Basically, when we apply the standard retrospectively or as per the requirement, there may be some changes in the current amount or in the current amount that is presented, that is based on the roll forward figures, that may have an effect. So we need to disclose that particular effect. Apart from that, we need to disclose the impact on each financial statement line item. So suppose it's going to have an impact on the revenue amount, we need to disclose the impact. If there is an impact in the accounts receivable, we need to disclose the impact. Okay, this is the old amount as per the old standard, amount as per the new standard, the difference and the reasons for the difference. Accordingly, we have to modify the IAS 33, the EPS, as for the new changes. And if there's any adjustment, we've already discussed this part, but there may be sometimes the standard, there's some portion we may not be applied it retrospectively because of some practical hindrances, or it may be impracticable to determine. Then in such a case, we need to determine, or we need to present the circumstance which relate to this impracticability. Also, how did we deal deal with that particular event, like how and far we changes in the accounting policy have been applied, how we account for this impracticability in the application. And we do not need to disclose the impact on the subsequent periods. Only one period is enough, which means the financial statement subsequent period need not to be repeat these disclosures. So this is a basic structure of disclosure requirement under the changes in the accounting policies. Thank you.